Hello traders, Gary Wagner here. It is approximately 11 a.m. on the 7th day of June, Thursday, 2012, and this is the daily report for gold and silver. Sharply lower precious metals prices today as a direct result of, call it a non-statement or non-clarity by Ben Bernanke, and the markets reacted sharply lower. Gold currently trading off about $30. As you can see, $15.90 breaking through that very critical psychological $1,600 support level. The low, $15.77, and the high, $16.30. Quite a range for the day. We have silver off about 83 cents, currently trading $28.70 with a low of $28.32 and a high of $29.83. Of course, traders, we were in on the long side. Our stops were hit this morning. We did get out with a profit, not as much of a profit as I would have liked, but it was a profit nonetheless and not a loss on the day. You know, traders, all through the week, I have been talking about a resistance area that we have identified. It's simply a Fibonacci resistance area, and it's a quite long one because I will blow the chart up in a second, but I wanted you to see where we were taking our two fixed points from. We are really looking at this entire rally beginning in 2008, right at the end of it, and concluding last year when we hit this new record top of 1920. Our 23% retracement level, that's the level we have really been talking about. And as you can see, when we look at this market and look at where it is now, there is really no doubt that that was a resistance area that gold, simply put, could not overcome. Now, really, all I'm going to do is blow this chart up. In other words, let's make it so that we can see a little bit more activity. And as you can see, when we look at the market with this particular resistance area in mind, you can see that we had a couple of attempts. We're looking at a daily chart, but the inability really to take that out. You can see that these highs right in here match quite eloquently with that resistance area. You can see that resistance area being support in this area. And there's no doubt the market simply couldn't take that out. Now, with that in mind, where should this market go and what are our different resistance points? Now, to do that, we're going to look at this market a little bit differently. We're going to create another Fibonacci retracement. And traders, what I have done is simply added a very short-term retracement. And this Fib retracement is plotting from this record top at 1920 down to the dip to 1520. And here's what I find interesting. The first thing is when we look at this chart, this resistance area, the long 23% resistance area, matches up short term. There is a perfect Fibonacci harmonics right here in the marketplace itself. And of course, this is where we identified that resistance area. You can see resistance is support right in here. It's also support right in here. But here's what's interesting. When we look at this market, you'll see that the various support and resistance area, there's considerable resistance right here. This is just above 1650, 1668. And you can see these series of three tops. They turn out to be very strong resistance. The market cannot take that resistance out. When that happens, of course, the market trades through that, and it actually even trades through this next band right here, which is the one we have been talking about, and then makes that double bottom, as you can see. Market comes back up and finds resistance in this area. Look at these two tops, though, traders. These two tops are just above the 38% retracement area. You can also see quite easily how these tops here failed to take that out. You can see support right in this area, support right in here. And what that tells me is that, first of all, we are absolutely trading within a range. How do we define a range? A range is where it's not breaking out either the absolute high or the low. And our range right now is in between this 1765, this 38% level, and the 1520 area that we have identified. And so what we are seeing right now is this market really without the ability to make it through these particular benchmarks. And so I find that to be very important. Why? Because it tells us that there are areas in these low areas that we can look to take on positions and then watch how they react at these different benchmarks. Now, on a technical basis, there is another way to really take a look at how we hit this resistance area. Now, traders realize this market moves on fundamental data. There's no doubt about it. The technicals, in my opinion, simply clarify areas and express that fundamental news in a language of mathematics, which to me is a lot easier than deciphering the language of the economists or especially Ben Bernanke. And when we take a look at this particular chart, we are looking at a weekly chart. It is of August gold. And what we will see is as follows. We identified, of course, this pennant formation, this compression that we had going on, this long-term trend which was broken. You can see that the market comes down here, but as it goes into the channel, you can see it matches up right in here. This is that resistance area from the same Fibonacci retracement area right in here. But you can see that you have an area in which both this long-term support and this Fibonacci resistance area meet, and this is the area also in which the market did not have the ability to overcome. And therefore, what we really saw was this market come back down after not having the ability to trade above this level. In silver, we have a similar scenario. We are looking at July silver. It's a daily chart. It is in Heikin Ashi format, and we have a series of Fibonacci retracement data points. Our longest one, of course, same as gold, starts at the beginning of the rally and takes us up to this $50 top. Our secondary is going to really start after this long, protracted sideways trading in which the market was at around 18, and it hit its record top, the same record top. And here's what you can see. In terms of different support and resistance areas, I have plotted out the 61%. This is 30.30. Obviously, the market could not take that out. You can see it just fell shy of that right in here. You can also see that this particular point acts as support here, and it also acts as resistance here. A very valid Fibonacci retracement area that's going to give us support and resistance should have good historical data that really backs up that assumption by having those areas be areas that it can either not break through or break under. Luckily, we had stops in place which protected some of our profits. We were able to get out with smaller profits than I had anticipated, but we did get out with a profit nonetheless. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Bye-bye.